Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So on Friday we've got the non-farm payrolls release, although right on Friday it was difficult to suggest what the reasons might be for a pullback that has started. We've got only technical background, so if you remember we talked about free drive pattern on intraday charts, but still was some concern about what particular factors could trigger the pullback. And as a result, you could see that the numbers on the non-farm payrolls release, some components were released a bit worse than expected. For example, employment, hourly earnings was a bit worse. So it have got the chance for some reasonable minor retracement on the market, mostly on the intraday charts. But actually, guys, if we'll take a look at the higher time frame, so overall performance in the June, as you can see, the huge collapse that has happened leaves very small room for bullish mood on the market currently. And currently we, by the analysis, suggest that our central scenario includes two components. So first of all, some minor pullback maybe on the next week. We think that it should be somewhere to 1820 or 1825 before next strong downside action starts to develop. Because on the monthly chart, guys, we've got the huge bearish engulfing pattern. Market currently stands below the yearly pivot point. Trend stands bearish on the weekly is on the monthly chart. And these technical components really promises nothing good to the bulls. By the classic performance of the market based on the engulfing pattern, as you know, this classical shape of the price is the minor pullback inside the pattern initially once it has been formed, and strong extension major action later when it starts to work. So currently it means that we have two tasks. First is to estimate what potential retracement target stands, where we intend to go short, and possible targets to the downside. So to the downside it's relatively simple. We have the 1650 untouched major weekly target, and initially we will take a look at it. So it stands very close to the confidence support on the weekly chart around 1670. So in the beginning we will keep an eye on this target, but potentially I'm not excluded the possibility that gold could drop even to the yearly pivot support one around 1540. This will be a bit later. So on the coming week, the major task for us is to catch the position. So where to take the position. Based on the daily chart, we need to consider three moments. First moment is the levels. So you know, usually when the market forms engulfing, and this is actually, as you can see on the daily chart, this is monthly engulfing pattern. Usually retracement stands to the 30%, maybe 50% as a rule in most cases. So it means that we should get an area around 1815, 1830 approximately. Second moment, here we have classic fake bearish flag breakout. It calls as a bearish trap. It suggests two things. First of all, it suggests a breakout in opposite direction. Second, market has to pass approximately the same distance as the flag height in the direction of the breakout. So it again approximately leads us to the same 1825, 1830 area. Final moment, as you can see on the chart, is daily overbought. So daily overbought limits upward action above 1825 area approximately. So all the three factors gives us the perfect combination of the moments that actually point on the same area. And based on the daily chart, on the first stage, we will keep an eye on this area around 1820, 1830 as a potential level where we consider taking the short position. On the intraday charts, the patterns that we already discussed actually, but on Friday it was mostly hypothetically. Currently it's more evident. The pattern that could lead market to the target might be the hand shoulders, and if it will be correct, ABCD pattern creates the perfect agreement with the same area. This target will be somewhere around same 1815, 1820 approximately. As you can see, there's also the confidence resistance around 30% level on the daily chart. So it creates an agreement with the ABCD target. That's our trading plan for the beginning of the week, and then we will see. Hopefully, we will not get any surprising events or something that will prevent this scenario. Let's hope that will be realized. And let's focus first on this level as first approximation where we intend to go short, and then we will see and make adjustment if necessary. If you're a scalp trader, you of course could consider taking some long position based on the hand shorts or something of that sort with the upward action, but this is not our major direction. We are mostly dealing with the daily and high time frames. That's why we are considering context that we have on the daily and weekly chart, and based on this context we are mostly intent to go short. But it's not forbidden to consider the buying on the lower time frames. If you have the confidence with that and you have the trading plan based on the hand shorts, you could try to do this. So that's the scenario that we intend to follow in the beginning of the week, and let's see how it will turn.